We have with us Tanuj Shori, who's the CEO at Square Yards, joining in the show right now. Tanuj, I beg your pardon. Hi, good morning. Good to have you on the show. Just help us understand, Tanuj, in your reading, what's been the reality on ground? While we are hearing in pockets that, realty sales have seen a big spike up, the stock markets, of course, have been rewarding the realty stocks as well. But pan-India, is it safe to assume that realty demand is back with a vengeance?
So getting there, so let's understand the backdrop of what's been happening. So India real estate, unlike the global real estate, is coming out of probably the longest bear cycle we have ever seen. Property demand as well as the prices have been under pressure for probably close to 8 years now. And this is at least what we have tracked. We haven't seen a bear cycle this long anywhere globally. Considering where we are post-COVID, affordability all-time high, mortgage rates pretty much at an all-time low, a lot of government measures like stamp duty cuts, registration rate cuts. So that's propelling the demand, not just for and we have been hearing the trend that people moving to the bigger houses, bigger configuration, not just that, but actually the first time home users getting into the market and wanting to buy their homes. Are we back to the bull market yet? No. We are probably touching the pre-COVID levels as we speak now, but psychologically, and real estate is a psychological asset class, people would love to buy when prices are going up. So we are getting to the level where probably everyone is starting to believe that prices had bottomed out, volumes had bottomed out, and this is probably the best time for them to get an exposure in.
Sure. Tanuj, considering you at Square Yards deal with both new as well as resale properties, in big metro cities, what's been the trend like? Is it more resale or is it more new projects that are seeing the buying traction?
Actually, more new projects recently, surprisingly. I think that predominantly has to do with the mortgage rates being there where are. And two, a lot of developers realizing over the last few years the price and the positioning of the asset play. So incrementally, you're seeing larger developers, considerable developers across major metro cities coming up with the price points which are relatively much more affordable than the micro market prices which were prevailing there. And that's helping the launches. That's helping like what you heard about the Godrej. And similarly has been happening for a lot of other developers across the country. So launches, and this we are seeing pretty much after a long period of time, probably after 5-7 years, where every single launch which is coming to the market is pretty much hyped up. There's a significant offtake of the launch. Inventory sells out in the first few days of launch, or considerable amount of inventory sells out in the first few days of launch. And these, going back last 2-3 years, 4 years pre-COVID, we were in the situation where developers were struggling for the offtake of the inventory whenever they came to the market. But we believe that was more of an issue of price and positioning, and which is where most of the developers in India have realized that that's probably where the right demand is.
Good morning. My one question to you is that, we started hearing about the property markets come back primarily in Bengaluru and southern states. Is this now a pan-India phenomenon? Is it only in the bigger cities? We're being told that even the smaller cities are seeing a strong comeback in the residential market.
They are, but I would still hold my horses and say that it's still a big city phenomenon. So markets like Bengaluru, Pune, to an extent Mumbai, even Hyderabad are making a strong comeback. NCR less so. So smaller cities, tier 2 and tier 3 towns are recovering. But unfortunate truth about the tier 2 and tier 3 towns in India is the supply is limited. The organized supply is limited. So, and we have always said that at the top of our lungs, India is not a demand issue, India is a supply issue. And supply has not been sorted in the smaller centers. And if it were, you would definitely see the similar trends.
Okay. And, there even though it doesn't give very good returns, there are some people who have always preferred to buy properties, and then, basically their pension is rental that's off it. We've been told the rental market in the residential space has not come back. Is that ever related to the sale of properties? Because, it's not always for end-use demand.
So I don't know how many people pay attention to that, but rental yields in India are horribly low. Like on an average, you would get anywhere between 2 to 3% rental yields, vis-a-vis the cost of capital, which is a mortgage rate of probably closer to 7% now, which is pretty much at the all-time low. But you still have a negative carry of 4% or 4.5%, which is a very unique phenomenon. So if you were to chart India across the top 100 nations around the world, India would be in the bottom 10% quartile on the return residential yield vis-a-vis the cost of capital. And this is one of the key reasons why real estate demand got hampered when the prices stopped appreciating, because just owning an asset for the yield is not attractive enough. The only way for that to change is either mortgage rates come further crashing down, or yields go up. For yields to go up, prices need to go down. So we don't see that happening. So that negative carry will remain for a period of time. So globally, you are right. Residential real estate is a yield asset class where people do invest for yields to own that asset for 10, 15 years. Unfortunately, not that case in India, and probably will not be for a long period of time. So commercial real estate, yes, but not the residential real estate.
We are focusing on demand, but let's understand, has demand come back with pricing? And whatever pricing uptick we've seen, is that largely because of uptick in commodity prices, where builders are saying, look, steel prices, cement prices have gone higher, I have no other option but to pass it on. What is happening to that end of the spectrum?
So yes and no. So obviously, developers have pressure on margins, so they have no other option but to increase prices. But we have to note one thing, that even with slight uptick in the prices, there is a significant offtake in demand, which was not the case 2, 3, 4 years earlier. So 4 years back or 3 years back, if developers would have increased their prices by 10%, their sales would have collapsed. Which is becoming a bit inelastic today, because consumers are lapping up the new inventory at slightly higher prices. So to answer your question in a nutshell, yes, demand is coming back. Whether demand has come back to an extent so that we can call it an uptrend, I believe early days. We still need to wait for the next couple of quarters, but all the right noises are being made.
If I look at a pre-COVID headline, the headline was that there is a glut in the real estate sector. Unsold inventory is at an all-time high. That was the 2020 January headline before pandemic hit us. The September 2021 headline, and like you also mentioned, that new projects are being sold and sales like never before. Where has all the unsold inventory gone?
Still there. So it just relates to one thing I said earlier. India was not largely a demand issue. India was a supply issue. So a lot of that unsold inventory, which we heard about in the last 4 years, 5 years, was the inventory which should have never been built, which should have never been sold. So these were wrongly positioned, extremely high priced inventory. Even a couple of years back, even pre-COVID, there were certain launches which came and flew off the shelf as long as they were rightly priced. So basically what has changed in the last couple of years, what COVID forced developers to do is go down that price and positioning spectrum. And what the supply we are seeing in the market is much better supply, much more sellable supply than existed before.
I'm going to combine the two questions into one. My first question is, given that the RERA has had very large, far-reaching impacts on every large regional real estate builder, do you see that every sector, whether it is NCR or Maharashtra or South, only 3-4 real estate builders will be calling the shot? And the second question is that normally the real estate cycle is a 3, 4, 5, 7 year cycle. Do you see that happening also this time?
Answer in short, yes to both. I don't know about the 2, 3, 4, but definitely consolidation. The fact, the hard truth was in India, top 20, if we take entire country as a whole, top 20 developers were less than 10% market share 2 years back. That has already increased by 2x or 3x. But we believe an ideal sustenance ratio there over the next decade, as urbanization moves up, balance sheets become more important, delivery becomes more important. We believe top 20, top 25 developers would be around 40-50% market share at least. So consolidation definitely will happen, is happening at a very, very fast clip at the ground level in terms of land acquisition. So answer is yes, consolidation will happen. The second part of your question is, will there be a long-term cycle? Yes. Real estate predominantly, like you said, is a 5-7 year cycle. Probably more closer to 5 years than 7 years. And considering the amount of the bearish phase we are coming out of 8-9 years, as and when that market picks up, market may pick up this year, may not pick up this year, may pick up next year, but very closer to getting picked up. Whenever that turnaround happens, it will be a very fairly long-term bullish cycle.
Tanuj, great to have you on the show and give us that insight in what's really happening with the entire realty pack. Good speaking with you today.
Thank you.